Hi, Katie.
Hi, folks. Good morning. Sorry about that.
That's
Technical
okay.
over here.
All right, that's okay. Welcome back.
Thank you. Yeah, good to be back.
Happy New Year to you. And I follow you, Katie. And one of my first questions would be, you said, I'm not sure if it was CNBC, that should the S&Ps clear 4,800, that it could go to 61. So I was thinking about that, and I'm going, I wonder. I know Katie's a technical person, and perhaps what she's looking at is that 4,800 was the prior high, and the correction went to 4.5, and we
Mhm.
stalled at 48 for a little while. So 48's a breakout. You just tack on that 1,300 point range in the S&P, and you have 61. Did I guess right?
Yeah, so essentially it was the final high. So it was roughly
Yeah,
48.19.
you're right.
And
Okay.
the confirmed breakout for us requires a couple of weekly closes above.
Right.
So we got that, of course. And the bigger breakout really was in Q4. And that was above about 4,600. That
Yeah.
was a key level in our work, and a measured move objective from that breakout gets the S&P 500 to about 5220, which of course seems fairly realistic at current levels. So
Yeah, it
that's sort
did
of an
back then. Yeah.
yeah, it's I know that's a good
I,
point.
I I think I heard you say, I wish it would slow down the advance, right? It was,
That sounds like something I would say. A steeper a steeper rally is harder to sustain, of course, but what we actually saw in the start of the year was a good consolidation phase. So that kind of normalized the slope of the trend to some degree, and
yes.
we welcome that consolidation. We think we're in store for a few days of consolidation in here near
Okay.
current levels as the mega cap earnings are digested. But then,
Yeah.
when we harken back to past advances from sort of recoveries from bear market cycles, you'll notice that the breadth surges that tend to sort of precede the big, sort of bull market moves, very similar to what we saw in Q4. It takes a long time to get a significant correction. So we're of this camp that not only do our indicators not support a significant pullback at this time, if you go back to refer to sort of previous environments that could be comps, referencing the past bear market cycles,
Yes.
it tells us that we really want to stay on the right side of the momentum. And I know that's sometimes difficult from a fundamental perspective, but we feel it's important to stick with those momentum gauges. And as you could imagine, that they are pointing higher still across time frames. So dailies, weeklies, monthlies, referencing the MACDs, they all still are pointing
They're
higher.
on go.
I mean,
They're
we'll
on go
have,
green.
of course,
So
yeah,
will
yeah.
the
So,
difference
so
be sector leadership during this? Looks like to me, if you're correct, kind of like a final stage melt up parabolic move to. I
yeah,
I
and
know some people are talking 7,000.
mhm. And so the 6,100 level, I don't think it's necessarily realistic for this year,
Okay.
because it just, in percentage terms, it's pretty aggressive. The way we're deriving that objective is from a measured move, going back to, if I can share my screen, do you
Yeah,
mind?
sure. Been
Okay,
waiting.
so we're looking at a measured move. I'll show you on the monthly bar chart of it's actually a cloud chart of the S&P 500. You'll see where that 6120 is coming from. And it's essentially taking this COVID corrective low,
Yeah.
taking that uptrend, which of course was unusually strong, and
Yeah.
projecting it higher from the low point of the bear market cycle. So that's where that
Equality.
6120 comes from. Yeah.
Okay,
And
so equality with that. All right. So
yeah, and so
then
it's
then do we have to respect if there are closes back under 4,800, that there's, if it is a breakout? We
no,
don't want to see
not
it,
in my work. Yeah, I
not
mean,
in your
it's
work?
already confirmed in my work. So as long as you get
Okay.
those two weekly closes, where you get non-confirmation is when you have, sort of that 1 week above, and then it kind of finishes right back below. An example of that today would be Google or Alphabet
All of them.
responding negatively to earnings. that
Yeah.
stock had come right above final resistance around 151 and looks like it'll come right back below the following week. So that would be a so-called unconfirmed breakout. And usually those are setbacks. We also saw one from gold. Gold, as I'm sure you're tracking, it had come right up against final resistance. We're calling it about 2063 for the gold, generic gold futures, and spent another week above, but then couldn't confirm that breakout. And it's proven to be a very big hurdle for the price of gold. So we think that's a setback for gold, but the longer term gauges, which hopefully we'll pull up here momentarily, do point higher and suggest that there's a potential for a breakout from that big range in the price of gold. So
How about
so
the
that would be a
weakness in the
catalyst.
miners compared to what's happening in the physical gold market and silver
Mm-hmm.
market? You have a
Yeah,
comment on that?
I think that's, it's got a little bit of a double whammy, right? You have consolidation that's unfolded in the price of gold itself, but then also you have, these areas of the market like gold miners being treated as sort of more defensive areas of the market. Anything commodity related, including most of energy, in the equity market has really underperformed. And that's in a very strong tape that has favored other sectors that are more often sources of upside leadership during bull markets. So
Financials?
technology, yeah, financials have kicked in. So our ETF, the Fairlead Tactical Sector ETF, or TACK, has added financials and industrials, and we expect to add another sector this week. So we're moving risk on, and what's happening there is the breadth expansion is moving from those kind of mega cap heavy sectors to other sectors like financials. So, and financials is a big one. I mean, that's a big piece of the S&P 500 in terms of its weighting. So that's something that we think can contribute to this strength here, or the really the longevity of this bull market cycle. And then we also highlighted today in our weekly report that the stock 600, a European benchmark similar to the S&P 500, has a breakout, a confirmed breakout, and that shows just the broad participation, even from areas of the market that have underperformed. I mean, European underperformance has been real, but there's some
Yeah.
signs of downside exhaustion there that shows us we could get some stabilization in relative terms from European equities for what it's worth. So we're
Okay.
really seeing that.
Could that
Mhm.
be because they're that the dollar after this bounce is complete could head lower, and that's going to favor uh, emerging markets, take the pressure off them, and markets outside the U.S. that have
Mhm.
been underperforming with a strong
Yeah.
dollar, you'll get better performance overseas.
I think it would make sense that, it's not a sort of a one for one correlation that we have there. But generally, at least especially for emerging markets, you do see that in the relative performance, right, where it certainly improves with a weaker dollar. Here's our dollar index chart. You can see,
Yeah, I see.
it's come into the cloud. This is the daily. It's come into
Where's
the
the upper
cloud-based
end of the
resistance.
cloud, Katie?
The upper
Where's the
end,
up?
if we look out to next week, it's at 103.86. And so not terribly far from these recent highs in here. But I appreciated Blake's, sort of mention to say, it's good. There's a lot of risk in here with the Fed announcement, and I would add to that the mega cap earnings more broadly. So I don't know that there's a trade here at this moment, but there is resistance at the cloud. And if you see here, look at the MACD histogram. That histogram there has been
Yeah.
trending lower for some time. So it suggests that it's sort of on the verge of this daily MACD sell signal, and you have a short-term overbought downturn. So collectively, the metrics do support a lower dollar here. I can't say I have any edge ahead of today's
I'm
announcement.
looking for 104.80, 105 as a
Are
sell
you
zone for me.
okay?
Yep.
So then, there's no DeMark signals or anything to speak of. So I don't have any indication that will go higher. But I also, think that it's really difficult to put on short-term trades ahead of
Yeah.
these types of events. So we generally stay away from them. You'll if you follow our work, you'll notice that we won't really comment on a stock that has earnings within the next day or two, unless it's just to provide levels and information, because it's hard to have an edge when there's a sort of a headline risk there.
Where are you at on Apple and its underperformance for quite some time now? And
Yeah, it
what?
has underperformed. I think importantly, the rest of the mega caps have done very well. So
Yeah,
as much as Apple is important, it's a bit of an outlier in terms of its relative performance. And it has maintained its uptrend. You can see it here.
yeah,
But notice that this is on the monthly chart. Notice that the MACD is sort of neutralized, and that just feels like it's a function of a DeMark signal. You had a DeMark sell signal back here, seemingly
yeah,
suggesting it was overdone. But I wouldn't rule out a breakout ultimately for Apple if it can get through that 198 area
yeah,
as a positive catalyst. That would be certainly, I think, actionable. Right now that there's a little room to support, which is roughly 183 on our chart based on the daily cloud model and also the 200-day moving average. So if I was looking to add to Apple, I'd probably wait a little bit, but not a long time, because I do think that we'll see that long-term momentum pick up again. But
got to
as
hold
you,
180, Katie. Underneath it, there's a lot.
yeah,
It's a
I think
trap door,
180. Yeah, I agree. 180 is kind of a key level for it, and
or it'll
we don't
become
have.
another Tesla.
Oh goodness, I know. Well, here's the good thing about Tesla is that, and listen, this is a good short-term thing, but whenever you see an earnings-driven gap down, or just any kind of big gap down like that,
Yeah,
when you see that the security come back up into the gap within the next, I'd say, like, week or so, like you saw here, um, you see how it got inched right up
yeah,
into the gap yesterday. That
yeah,
usually means that gap will be closed pretty quickly. So for those that are stuck holding Tesla, I would
yeah,
say just give it a little time and room, and you might be able to pare back closer to former support, which was roughly 208 in our work. It is a
okay,
meaningful breakdown, though, if it hangs down here, because this is the monthly. You see how it's below the cloud. So if
yeah.
it hangs down here, reacting to this weakening of the long-term metrics, well, then that becomes, yeah, certainly a selling opportunity into the bounce.
How about the downgrade on Intel, which really did participate for, not kind of a new age AI stock, and um, really got cratered on that downgrade. And I wanted to
Yeah.
ask you, but you were probably too young. What were you, about 5 years old in 2000?
Oh, that's kind of you.
Were you in kindergarten? Because when we had the downgrade in 2000, Bill Henner, a floor trader, guest of mine, sent me a message on Friday saying that was having a flashback that back in 2000, after the downgrade in Intel, it marked a pretty important high, and uh, that was the
Yeah,
dot-com
it
area.
did. But we have to have the market context, right?
Yeah,
So and such an acceleration. So this is an acceleration that had followed an already sort of prolonged bull market cycle for not just Intel, but the broader market. This is
yeah.
different because it's effectively a turnaround after a bear market cycle. So
Great,
I would, as
great
steep as that
point.
is, it's a much different composure. And what I'm encouraged by is the fact that on the DeMark work, not only did it respond to this DeMark signal down here, this 9 is a so-called sort of oversold buy signal, and
Yeah,
here are the sell signals here on the 13s. This 9 here, it kind of just shrugged right off, and usually when we see that, it tends to be a very strong market. It's a loss of momentum for sure within this turnaround. This is on the weekly Intel chart. I think it's just a correction. I think it'll ultimately give way to another opportunity to take advantage of this turnaround, this longer term turnaround. There is good support, and it's roughly like 40 to sort of 42. There's definitely some support in there.
okay. I know your view for bonds, 10-year yields are about 330 sometime this year. Can you show us technically how you get to that level? Because I was thinking maybe one more bounce to 440, and then
Yeah, it's funny that 440 level is a level that we're watching too,
okay,
and I wouldn't
yeah,
rule that out with obviously the possibility for news, macro news, right? But here's what we're seeing. Our indicators don't point to it right now. So if we
yeah,
look at the daily chart, which is what we posted in our weekly report here, today, here's your relief rally in yields.
Yeah.
Came into the not just the 50-day, which is certainly a point of reference, but the cloud is our kind of key resistance area,
Yeah.
right? So the cloud has provided resistance, and then we have these downturns in our short-term metrics. If today's action or non-action leads to it to
Okay.
come into the cloud, so let's see what that would be, above
Or
410.
yeah.
If it gets
Okay.
above 410 today, well, then I think 440 is actually pretty realistic. That's right at the upper boundary. You see that at the cloud.
Yeah.
So today does
Okay.
have some significance in terms of the
And
short-term
then if
implications.
and then if we got up there, Katie, equality of the first break, which was 120 bips from 440 gets you 320.
Yeah. And well, and here's like the really important takeaway is that this corrective phase or downdraft that we've seen off of 5%, look at what it did. This is on the monthly chart. Look at what it did to the monthly stochastics and this monthly
Wow.
MACD, even more importantly. That
Yeah.
MACD had been supportive of the uptrend since late 2020. So it tells us that the significant loss of long-term upside momentum could give way to, I don't know, a year, 2-year type of corrective phase. So,
Wow.
and that's not
And
unusual. I mean, we saw during
and
the
the cloud
downtrend.
is under 2.
Yeah, yeah, and I think the cloud's probably not super relevant at this time, just because it is so far, but also, we're advancing from a range. This
Yeah.
is what we're watching is sort of this as our cyclical up
Fips.
move, and now
Right.
we're in this corrective mode. So about 3.25, so 322, and then these lows around 3.25. That to us is
That's
the kind of key long-term support level. In the
yeah.
interim, there is a cloud-based support level that kicks in around 390 for the weekly cloud. So maybe it stabilizes in there temporarily, but we do think it's a corrective year. And that's something that certainly could provide a tailwind for equities and some other asset classes.
Yeah. So TLT had a very nice move from what was 82 uh to 100.
Yeah. And
Right.
I do think that's meaningful, just
Yeah.
to the same point, really. And
Right.
we highlighted in TLT. We have sort of in the TAC ETF an equivalent of TLT, which is SPTL. And, we saw this 13, which is a DeMark signal. It was the first counter trend signal since this on the sell side. So that had us paying attention and look at the subsequent upturns in our long-term metrics. So we
Yeah.
think this is an important low. Again, it could be an important low, maybe with 9 to 12 months of duration, not 3 to 5 years.
Yeah.
But it does suggest that the bear market cycle from here it has ended or matured into something that at least looks more like a trading range, if not a reversal that's a little bit more pronounced than that. So that suggests that we kind of maintain treasury exposure, but we would look for equities to outperform in this environment. So we would still have some exposure, but we would look for outperformance from the S&P.
You've held core positions in energy stocks for a while, and I'm gathering with it being a laggard in the last 6 months. Do you still hold your core energy position? Because
No, we kicked it out a while ago, actually, and it was really, you can see why. It's just the loss of long-term momentum and also relative strength. So we look at these, we look at them from a long-term perspective. So for one, if you look at XLE, this is the energy select sector spider. It's got a lot like a triple whammy in a way of negative indications. You had a DeMark sell signal, you had a downturn and a negative divergence here, and of course, very weak long-term momentum. And then we have in relative terms, we track the ratios, and
yeah.
you can see a pretty decisive downtrend having unfolded. This is sort of where it peaked was in early 2023. We had a good relief rally, but it's clearly entered a downtrend cycle. You can see that in the 200-day moving average. So yeah, we're
Opposite
out of energy.
scenario. Opposite scenario in uranium, Katie. With
Yeah, the
right?
uranium. I laugh because this was one CNBC pushed us for an idea at a time when the market was just lousy, and I used uranium because I mean there's always an uptrend out there somewhere, right? And
Yeah.
it just happened to be one of the few at the time that had an uptrend in place in what was it still a bear market cycle for equities. So here's uranium. Yeah, I mean, what great long-term momentum
Yeah,
characteristics you
look at
have
that.
here, and then a relatively new breakout. And what we've been seeing is that the breakouts have been pretty actionable, certainly in the equities. But here also we feel like once we get these breakouts that we have the rationale to add exposure into these types of pullbacks. So certainly a good setup here.
And also, you were right about the the minute you guys stopped covering cannabis stocks, they would bottom and turn up.
It's funny,
So,
yeah, that you remember
huh?
that.
Yeah. So it really was pretty close.
Yep, and
It
that's
was pretty close.
isn't that just Murphy's Law, right? And you
Yeah,
can see, I mean, there's a good basing phase in place here. So
got
really,
it.
this is MJ, the
Yeah,
ETF, but here's a DeMark buy signal that's still actionable. So and
yeah,
look, the MACD just inched. This is on the weekly, just
yeah.
inched into positive territory for the
Well,
first
let me
time
get my
since last year.
magnifying glass.
I know, I know. We should be using
All
a
right,
different scale.
all right, yeah. Okay. So I mean, there's a lot to be long.
Yeah, and that's when we do our bottom up work and look through the components of the S&P 500 or look for ideas for a Substack newsletter. It's not hard to find really compelling setups. At times we'll, want to avoid consolidation phases and let the market come to us a little bit.
Yeah,
And yet, there's very broad participation. So I really do think that this is a stock picker's market, and meaning that fundamental analysis will pay off a bit more than it has. We obviously are technicians ourselves, and top down influences are always super important to have a handle of, but in certain environments like a bull market cycle where breadth is strong, that's where you can really dig into the fundamentals and find these great opportunities. And I think the rotation into the sort of higher growth segments of the market, the cloud computing stocks and sort of small and mid cap tech, that there's some really major base breakouts in that segment of the market. And I think that that's something that we, um, should be paying attention to. So to the extent that these companies have, sort of fundamental prospects, right? Look at
yeah.
these. I mean, this is just Snowflake as one
The longer
example.
the base, the bigger the launch into space.
Yep, that's right. That's right. So here's, look at these base breakouts. These are really, they're very widespread. There's something that can obviously contribute to the longevity of the broader bull market cycle, but these could be, 3-year type, advances in the making based on the width of the basing phases. So we're certainly encouraged by the action in high growth names.
Well, they're probably even gonna, I mean, there's so much constructive stock action that the microcaps, which I don't care what sector they were in, all got killed.
Yeah, I mean,
They're
wow,
they're
that you're
they
right.
could really come back, couldn't they?
Yeah, and we saw it, and especially
The
from
Russell,
last year, that tax
yeah,
loss harvesting season was really brutal on the small cap complex.
yeah,
But it was followed by like a pretty violent relief rally, and that relief rally off the October low, this is just IWM, but
yeah.
it lifted a lot of the small cap benchmarks and even equal weighted benchmarks in turn above key resistance levels. So we feel like this range for IWM is resolving to the upside.
Okay,
And these are pretty widespread setups, and see like this even is a very bullish sort of short-term indication. We call it a stochastic pop. So we're pretty constructive on small caps as a function of the breadth behind the market. It's still a bit early to say, okay, well, we're going to have lasting outperformance here, but you can certainly make a case for relative stabilization, meaning that small caps at least perform closer to in line with the large cap complex.
okay. Katie, every time you come in here, my mind is open to a different view than I had before we started talking. And,
That's a
you
great
know,
deal. Really good to hear that.
really, I say to people, keep an open mind, it will keep your account open, right?
It's a
So,
good way to
you know,
frame it.
yeah, and I want to thank you. We've been talking for years now. I want to thank you for coming to edify our community with your great technical work every 3, 4 months, and really hope this is one of your best years ever
Of
in
course, Dale, and I really
2024,
appreciate
Katie.
that, and always glad to join you all. And by all means, stay in touch.
Okay, so follow Katie on X at Stockton Katie. You want to show your website,
Oh
Katie,
yeah,
where
I
people,
can do that.
maybe you have some new stuff going on for this year where retailers could come and
Yep,
edify
yep.
themselves, learn,
We
follow
do
your work.
have so what I will say is that we the best way to get to know our methodology, we're very oriented to sort of systematic research. We have actually 9 reports that we're publishing a week, so we're very prolific. Almost sometimes I say, why do we have so much?
To
But
say,
fairleadstrategies.com. What I would encourage folks to do is just to go to request a trial, and you'll be able to see the full suite of research. And I think the value in it is just the consistent sort of episodic coverage, and in the same way, Dale, that we're talking today about the markets.
yes,
We're not ultra predictive in our work. We're just trying to help folks manage risk and stay on the right side of the tape, and at the same time generating a lot of ideas. And then we also have a relatively new newsletter called Idea Generator. This is on Substack, and this is just my dashboard. But we put all sorts of ideas here, just actionable setups from a bottom-up perspective. So for those out there that are trading individual stocks, this might be of interest, and it's very inexpensive. I think it's $9 a month or something close to it.
well, I strongly advise people to include Katie in their intelligence gathering. If you don't, it's not intelligent. So
Thank
really
you, Dale.
really appreciate your work, and you, Katie, and everything you do. Thanks again, and I'll get in touch with you and talk in the spring.
Same here. Take care.
All right. Katie Stockton, everyone. I know you enjoyed it. It's always fun for me, and she sure makes it hard to be a bears. So that's a wrap for us here today. Katie, everyone really appreciated it. And remember, don't just count your pips, count your blessings. Good luck on Fed Day, everyone. And I'll see you tomorrow. Adios.
Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.